Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, October 20th, 2025. So today marks the 20th day the U.S. government has officially been shut down. I bring that up only in the context of the fact that much of the economic data that we normally get has not been available. So when we look at the economic activity from last week, most of it is X's, not available. PPI, core PPI, retail sales, jobless claims, none of that available from last week. So we're kind of flying blind at this point. But a few things. One, the U.S. economy appears still to be doing well. So you may recall first quarter was very tough this year. GDP was negative 0.6. Second quarter, very strong, plus 3.8. And the Atlanta Federal Reserve just upgraded their expectation for the third quarter, now sits at 3.9%. So despite the fact we don't have a lot of new economic data points, the Atlanta Federal Reserve would suggest the U.S. economy is still doing very well at this point. Now, in terms of inflation expectations, this actually has been going down. These aren't large numbers, not big changes, but just 4 months ago, we were consistently in the 2.4 to 2.45% range. Currently now, 2.27. So again, that is the expectation for inflation average over the next 10 years, 2.27, very solid. Now, Fed funds, we do have a Fed meeting coming up on the 29th. The expectation, 99% will get a cut, so we're definitely getting one. We already got one earlier this year in September, so that'll be the second one. Then by the end of the year, expectation in December, we will get another one. That will be a total of 3. Now, have not heard much about expectations about 2026 and what we might expect. But given the fact that Jerome Powell, the chairman of the Fed, his term is up, I believe it is in May next year. And as that occurs, if we have a Trump nominee, strong likelihood of a few additional cuts next year, everything being equal. So one thing to mention about last week, again, economic data really not available, but corporate earnings have started to come through. So we're at the early point of all the third quarter reports. So we have 12% of the S&P 500 companies now have reported earnings, and this is really strong. 86% of them have exceeded expectations. Now, the amount that they've exceeded, a little less than normal, 5.9% above the consensus, which is, again, below longer-term averages. But nonetheless, 86% of companies beating is a very strong showing. So because of that, the expectations have been increasing for those third quarter earnings. Just a week ago, the expectation consensus was 7.7% year-over-year increase for S&P 500 earnings. Based on what we saw last week, that consensus has moved up to 8.5%. So let's take a look at the markets last week. Again, in the absence of economic information, you could expect almost anything, but it was actually it was a strong week. S&P 500 up 1.7%, kind of distributed fairly nicely, the best performer, U.S. small cap. So that leaves us on a year-to-date basis, the S&P 500 up about 14.5%. International markets last week, emerging market was down a little bit, developed markets up a little bit. Both of those indexes, as we've mentioned, have outperformed the S&P 500 significantly this year. So S&P 500 again up 14.5% year-to-date. Developed markets ex-US up 25.6%, and emerging markets up 29% year-to-date. Fixed income, this is just a great story year-to-date. Another strong week, the Bloomberg US Aggregate Index up 45 basis points. So for the total year, full year, the Bloomberg US Aggregate Bond Index up 7.2%. So economic data for this week, again, government shutdown. There's a potential, obviously, for that to be rectified during this week. In fact, here Monday, as we're recording this, equity markets earlier today were up pretty strongly based on the expectation we will see some remedy to the government shutdown in the very near term. So far, we haven't received it, but many of the economic data points that we would be expecting to see this week, we're not going to see. Initial jobless claims, existing homes, that was expected to be on Thursday and Friday, would be a big number if the government were to print these numbers, because CPI would be reported in both the core and the headline number. And the one metric that will be posted will be the Michigan Consumer Sentiment Index final number. It came in at 54 plus on the preliminary and expected to be at 55. So that's it for our recap of the markets, all the economic data that we didn't see over the last week. We thank you for your attendance. We hope to see you in 2 weeks, as I will be out next week. Thank you.